Our next guest is fighting the momentum, not only of the market, but in Apple in particular. D.A. Davidson downgrading Apple today to neutral from buy. The analyst Tom Forte joining us now. It's good to see you. I'm glad you're here today. Why'd you do this?
So thanks for having me on, Scott. So I think it's a combination of it's already priced in the stock. The stock's trading at not only near 52-week highs, but all-time highs. It's trading at a premium multiple on an adjusted enterprise value EBITDA basis, PE, sales basis. And then there are structural challenges to mass adoption of augmented reality, virtual reality hardware that are going to be difficult even for Apple to surmount. When you think about price, offering it $34.99 does nothing to improve mass adoption. Content, it's wonderful that Disney Plus will be available at launch early next year, but we're waiting to see more content. When you think about the iPhone was great, but you needed the App Store and the apps for consumers really to appreciate the device. And then from a form factor standpoint, you talked about ski goggles. Are we really going to walk around wearing ski goggles? We're not. Even Apple, with all its excellence in design, couldn't make this product look good. It's got a 2-hour external battery life that's also limiting. And then the challenge for Facebook, for Sony, for everyone when it comes to AR/VR is for a small portion of the population, they get motion sickness when they use the product. Okay. So these structural challenges are the reason we downgraded Apple shares.
Okay, so this sounds very specific to Vision Pro. Fundamentally, you just don't think the product's going to do that well. You think it's too expensive. The one area I would come back to you on is where you suggest it's already priced in. Now, how can it be already priced in if we just learned about it yesterday? We didn't really know what we were getting. We didn't know what the price was going to be. So how can that possibly be priced into the stock?
We didn't learn the details, Scott, the $34.99 price point, some of the functionality, things of that nature. But I think there was speculation that they were coming out with what is their most significant new product since the 2007 iPhone launch. And I think that drove the shares, in addition to investor enthusiasm for artificial intelligence, and then very company-specific issues like the reopening in China, benefiting Apple from a supply chain standpoint and a consumer demand standpoint. But I do think the expectation of this new product launch contributed to Apple hitting its all-time highs leading into the event.
But if this was priced for half of what they priced it as, would you be downgrading it today or not?
Yes, because the structural challenges are still the same, meaning that they're not going to have, it appears they're not going to have an abundance of content, so the use of the product at launch is still limited, and there's challenges on the form factor, like I said, as far as how the product looks, battery life, things of that nature. And even if they priced it half as much, you have a competing product from Meta Platforms at $499, which is a lot cheaper and stands to benefit from Apple driving mass adoption or trying to drive it in AR/VR hardware.
You keep your price target, actually you lower it to 185 from 193, so we could see with the slippage today a little bit of work to do to get there. Tom, thank you. That's Tom Forte, D.A. Davidson. The fact